New lows likely coming. Watch for 3,500 in S&P 500. BofA's Suttmeier Nasdaq futures are down nearly 3% Monday after U.S. Treasury yields moved sharply higher, pushed by way of rising prices and fears that aggressive rate hikes with the aid of the Fed will push the economic system into recession. An growing range of traders are now watching for a 75 basis points hike to be introduced on the long-awaited Federal Open Market Committee (FOMC) assembly later this week, rather than the first of all expected 50 basis point increase. The 2-year, 10-year U.S. Treasury yield inverted for the first time in 2 months, with many economists viewing this as a signal of recession that would come in the following years. Key market indexes also tumbled following the trendy Patron Rate Index (CPI) statistics, with the Dow, S&P 500, and Nasdaq by means of 2.7%, 2.9%, and 3.5%, respectively. Bank of America technical research strategist Stephen Suttmeier has weighed in on the S&P 500 technicals as futures factor closer to a sharp drop on Monday. The S&P 500 futures are trading within the low 3,800s, with Suttmeier noting a assist quarter among 3,858 and 3,810. The inability to clean first resistances and the dearth of bullish follow-through signals from the indicators increase the chance for lower lows closer to the next helps at 3,500, 50% of the March 2020-January 2022 rally and growing 200-week MA on the SPX, he informed customers in a Be Aware. As for NDX, the strategist sees a support zone between 10,776 and 10,589, rising 200-week MA and 61.8% retracement of the March 2020-November 2021 rally. Suttmeier also reminds customers that key tactical signs failed to interrupt out. The U.S. top 15 most lively advanced decline line stalled at 3,123. The percentage of SPX stocks above 50-day MAs did not break out above 46.348.7%, and the 3-month VIX relative to the VIX did not clean 1.101.11. We viewed those as resistances to break above that might favor a persevered rally in ultimate week's market comment. The failure of these signs to break out is a major hazard and U.S. equities have answered bearishly, he concluded. On the other hand, Goldman Sachs' David Kostin sees the S&P 500 losing all the manner to 3,150 in a recession. If by using year-end consensus 2023 EPS estimates circulate halfway towards our top-down forecast of $239 and the P/E multiple stays steady at 17x, the implied index stage might be 4,165. In a recession, if the EPS estimate movements halfway to $200, a 14x P/E might deliver the S&P 500 to 3,150, Kostin wrote in a Be Aware.